Okay, I guess I'll kick it off now and welcome for the participants and welcome the panel members. The topic for today's panel is the state of blockchain and cryptocurrencies today. I'm really fortunate to be having some really amazing panel members. I've known both Jonathan and Alon and Todd for some time now, some amazing entrepreneurs and some great experience. So this is going to be a fun panel. I had fun preparing for it, so looking forward to the next 30 minutes that'll go a bit more deeper into our experiential leadership, but also in terms of what we feel about the industry as it moves forward. So welcome panel. Thank you for joining me for this. And I would like to, again, briefly introduce you all. So please take some time to introduce what you're doing, what's your passion, and then we'll quickly jump into some of the questions. So with that, maybe Alon, I'd like to give you a few minutes to introduce yourself, what you do, what's your passion, and a few sentences about the topic today before we move on to Jonathan and then to Todd.
Sounds good. Thanks for having me. Welcome, everybody. I'm Alon Gorin. I'm one of the founders of Draper Gorin Home. We are an early stage blockchain venture studio is what we call it, but essentially what that means is we invest in blockchain startups very, very early and are very active and participate in helping grow them. We've been in this space for a few years now full time, but have participated in it for much longer than that. We also host one of the largest blockchain conferences in the country or in the world, I guess. It's called LA Blockchain Summit now, but before it was called CIS, which stands for Crypto Invest Summit. My background is in technology. I am an early techie from a young age. First job in technology was actually in the systems architecture group at Countrywide before everything went crazy. And from there, it was actually short-lived because I got to work at MySpace and then at IMDb before quitting to start my own company in the crowdfunding space, which led me to here. So very excited to be here and to be a part of this industry. We're excited for what's to come.
Thank you, Alon. I think that's, as I've known you for some time, that's an amazing career, and I think it's a good transition path. So welcome to the panel. Jonathan, I've known you for some time now. I've been through some of your adventures. We've done some adventures together between Hasera and IBM. So would you want to take a few minutes to talk about you and that amazing background that you have that you want us to be all jealous about?
Not to be jealous, just to kind of encourage people that life continues despite COVID, So yeah, Jonathan Levy, I'm actually a super geek. I've been spending many years in computer science and cryptography. Spent around 10 years in banking, so S&P, Goldman Sachs, Barclays Capital. I was the head of global risk at some point when Barclays Capital, during the credit crisis, and then Barclays Capital bought Lehman Brothers. And I spent a lot of time in highly regulated environments. And in 2012, I decided to leave everything and start working on Bitcoin. First thing I've done in Bitcoin was actually I was the chief product officer in Miro Labs, which is a company that Nick Szabo was one of the founders and was the CTO early on. And the idea was to try to put digital assets on the Bitcoin network. And later on, like there was the Lightning network that was released. And we had a lot of issues with the SEC and getting a no action letter. Very short after that, Ethereum came up. And it was actually 2014. And then Vitalik released Ethereum, I think it was August 2015. And I started working on Ethereum as well as Bitcoin. And at some point, I had a big talk about like regulations and Merkle trees and why we need KYC and AML and why I believe that actually we're going to make these systems a lot more useful if we actually meet regulations instead of going against regulations. Long story short, IBM loved the idea. And I started working with IBM research for like 6 months. And I designed the permissioning or the identity kind of layer of Fabric. It was the Fabric CA membership services. Left IBM in October 2016 to open a company called Hasera, stayed an IBM partner, continued as an independent partner to release manage Fabric with like 160 developers, 28 organizations. It's kind of a big thing. 2018, we released a hybrid network that allows, it's called the Unbounded Network, as you can probably see on my shirt, that allows people and organizations and participants to work with both permission networks and public networks in a legal way. You know, you have a same identity, you can know who the participants are. If you want to have non-validators like in Fabric, no problem. If you want to work with like miners like in Bitcoin, same, very easy. And what we do today, I'm actually I'm currently chairing the token taxonomy framework, basically working group in the Interwork Alliance. So yeah, there's a lot of stuff going on these days. So there's a lot to talk about. Yeah,
No,
happy
that's
to be
great.
here.
I
Thank
think
you.
that, so this is a trend here, Alon from Countrywide, and then you have Lehman Brothers. So I think 2008 financial crisis led to a lot of talent working on this new space. So glad to be a part of that.
I've got a funny story of running into Anthony Mozillo at a conference more recently. And I just walked up to him and I said, you know, thank you for everything you've done for Bitcoin and the blockchain community. And he just like looked at me like, he's an old man now. And he's just kind of like very small and, you know, kind of meek looking. He just kind of looked at me confused and I just kept walking.
That's great. Hey, Todd, it's your turn now. Again, I was really, delighted to have a conversation about what you're doing. So take a few minutes and introduce yourself and your adventures.
Yeah, certainly. Thanks everybody for having me. Really appreciate the opportunity. Like you said, my name is Todd Lawrence. I'm from Burlington, Ontario, Canada, just outside of Toronto. Former background was in investment banking for RBC Capital Markets in Toronto, as well as Citigroup down in Australia. And I did that for close to a decade and looking to sort of expand into something a little bit different when cryptocurrency started to come out, and not having a really strong background in cryptocurrency myself, but understanding, I guess, the benefits I thought that could be brought to sort of the masses across the world with this type of technology. I really found it frustrating when I tried to figure out ways to purchase cryptocurrency. Everybody wanted, to know everything about me, whether it was my driver's license or my passport, or my utility bill or my phone records. And sometimes I was only to buy, $50 worth of cryptocurrency. And a lot of the time I also needed to wire money to Poland, for example, and rarely did that show up on time. So it wasn't the most convenient or sort of familiar, trustworthy type of transaction process to get some new people, even though I was fairly educated in the finance space, but not that in the tech space for people to be able to actually get in the market. So CoinSquare Networks, I helped co-found, and what we did is we invented some technology that allows existing ATMs to tie into our API, which allows them to sell customers Bitcoin through their debit card, as well as purchase Bitcoin and allow customers to withdraw cash. Now, a lot of people will say, ATMs are, going away of the past. The transaction volume at the ATMs is still really quite consistent. And what's something that we find really important, we don't think we're the be-all, end-all solution for people to get into the market, but we think we provide a really fundamental and great avenue for people who are interested in the market but are not quite tech savvy enough, or who want to get that involved in the tech side of things, and really provide them with a familiar, sort of convenient and secure method to enter the crypto market and exit it without having to go through all the traditional hoops that they would for a small purchase.
No, that's great. I think again, I want to take some time to introduce myself. My name is Nitin. I serve as Director of IBM Financial Sciences and Digital Assets in IBM Research. With Jonathan early days, I founded Blockchain Labs, which was the client-facing entity. And then I soon realized that most of the work that we were doing with clients was around database type work. And then I founded Digital Asset Labs, which brought the issue of the notion of digital assets to the blockchain ecosystem. So my career has been primarily focused on enterprise-esque blockchain. So I think we have a good mix of panel here. Again, Todd, you coming from a purely retail-centric mindset, and Jonathan, you dabbling between the enterprise and the true cryptocurrency world, and Alon, your interesting element of where do you see the investment dollars going, where do you see the potential. So I think we're going to have a great sort of mix of talent here. So I'll pose a first question, which is a very simple question, and take time to understand this because you all come from a different background. And again, it's a simple question, but I want to focus more on sort of the state of, the pragmatic view, not a grandiose view, but a pragmatic vision of the state of blockchain, which is the technology, and the state of cryptocurrency, that's the resulting element of the underlying tech. So we'll start from you, Todd, since we're going in opposite direction here. What are your thoughts?
Yeah, so I mean, I think that with a lot of the way that the sort of infrastructure has been developed over the last, I guess I've been in the space almost 10 years now, from when I sort of first started to learn about it. And I think we've all sort of seen a lot of companies who have started with great ideas and stuff, but haven't necessarily found the traction or sort of the customer success or sort of the stickiness with different customers and sort of clients over that particular point in time. And a lot of those companies have sort of gone the wayside, similar to different tokens outside of like Bitcoin and Bitcoin Cash, but some of the ancillary sort of security tokens or whatever they were sort of being named back in the day. And I think sort of the companies that are really going to start to capitalize on what they've built are the ones that have built something that's really unique in an infrastructure setting. So whether that's an exchange-based setting or a data transfer system, like John sort of referring to, or some of the early startups that Elon's working on, because what some of the the big finance institutions and companies of the past really have as an advantage, I think, is the stickiness with their customers and their traditional customer bases. And it's very difficult to go build a customer base from sort of 0 to like 1 billion customers or 1 billion sets of eyeballs like a Google might have. But going out there and building non-traditional technology and building some of the different, cogs and spokes that can help these established user bases enter the cryptocurrency market, I think provides one of the sort of greatest opportunities for some of the cryptocurrency companies that are out there.
Very cool. How about you, Alon? What are your thoughts? Do you agree with Todd? Or do you have any different?
Yeah. I mean, I definitely agree. I think that what we're seeing right now is some major adoption of certain products in the space, right? And major meaningful adoption, but compared to the existing world is very, very tiny, right? But if it was just a startup or just a startup community, you look at the decentralized finance space, we call it the DeFi space, right? There's $3.5 billion or so, $4 billion locked up in DeFi. Now that seems like a lot, and it is a lot, and it's super meaningful that a brand new, Aave, one of the protocols, has a few $1 billion now locked in it. They got a license from the UK government to operate legally and do some interesting things, and that's really, really cool. But if we look at the United States, the alternative asset space is annually $7 trillion a year in the US alone. Just that one category. That doesn't include real estate and certain kinds of bonds and different things like that. So, and that's just the United States. So compared to everything else, it's still very small. But where we're seeing it with digital securities and security tokens, Nitin and I are a part of a steering committee for another group where, we had one of the largest exchanges in the world CEOs recently, or what the exchange joined, but the CEO recently said that they don't expect any security to not be digital within the next 10 years. So IBM's products and things are going to be used to digitize everything. So where I see the exciting portion is what's being done now to get traction is going to continue to happen, but what will happen is there'll probably be a layer on top of it or some usability improvements that will all of a sudden spark some real mass adoption. Because right now the mass adoption is happening within the community. There's only a certain amount that the nerds amongst us who are willing to use things like MetaMask and crypto wallets and understand what it takes to hold your own keys and things like that will be able to do until we can educate the masses and until the products get better and more usable. So for us, we're investing in not just those underlying infrastructures, which is still our primary focus, is to invest in people building this space, but also the next layer where it's sort of the marketing, right? Like most of the products at our banks are not the banks themselves. It's the bank is the marketing arm for these products, right? So I see of crypto the same way. Like the things happening in DeFi aren't necessarily like completely revolutionary in the core concept, but it's the first time they're making it available in such tiny shares and cutting out all of the fat and all of the middleman. So it's exciting, you know. I think that at least that's how I try to separate it, right? I'm still most excited of that underlying layer that can power everything, but I think that there's going to be a whole layer on top of that where, you know, to make it more usable or to focus on a certain audience. Robinhood didn't do anything revolutionary. They just did it cleaner, faster, better than anyone else. Made the experience good. So I expect that to happen in crypto over time.
And you know, Alon, you touched upon a few of some really critical points, which I'll have as my question for the next sort of round of questions. But good points. I think this convergence that you talk about between the traditional crypto, which was meant to have a decentralized network and build this truly egalitarian sort of models, and what we call as what blockchain would do for the things of value, exactly what internet did for information. I think what you bring up is the whole DeFi space, which we'll touch upon. Jonathan, what are your thoughts?
So those who know me know that I'm super bullish on the space, and I always took a very long-term view. So similar to what Alon was talking about in terms of numbers, just to give people some perspective, Goldman Sachs, one of the desks, like let's look at Equity Desk London, okay, like 20 traders. We had daily value at risk, like VAR, of, I don't know, something like $130 to $150 billion daily. So this is the scale of what you're looking at, just equity trading flow, not even exotics. When you're looking at regulated markets, institutional investments, and you're looking at like long, short portfolios that are highly regulated, right? Everybody's running the same risk reports and books and records and stuff. So there is a lot of value in us taking a deep breath and working with the regulators around the world and basically building the required legal frameworks that will allow us to do more kind of efficient DeFi kind of trading with less intermediaries. And to be honest, some people are thinking that we are going like against the banks. I think that we don't need to convince the banks. The banks are already like, you know, super aware of what's going on. There is the R3 consortium that is now the commercial entity. The IBM worked with, you know, Anita, you're like one of the guys that we're working with, Worldwire, and everybody sees the efficiency. And I'm like, for me, people think that it's like, it takes too long and it's, you know, people are worried about the UX, which is a problem. But if I look at like a decade, we're just like halfway, right? And it's not a linear progression, because what you see now with the OCC and what you see like with JP Morgan today with consensus, so there is a lot more acceptance. The IMF video yesterday about cryptocurrencies. So what happened for a long time, you know, people looked at me as a crazy person for like leaving Goldman Sachs to work on Bitcoin. Now I look at people as crazy if they are not looking at alternative, decentralized public networks, comparing stuff with AML and regulations and automating a lot of things that are currently still manual. So there's a huge potential. And I don't know, the final point is, I'm not sure that we're going to see the same level of correspondence banking, like, you know, going to a branch, et cetera, especially with the new generations. It may not happen to my mom. She still likes to go to the bank, which is great. You know, she's happy, she feels comfortable, they know her. And it's actually nice, you know, to know that you have a branch, you have somebody to call, because the technology is still not that mature. But at some point, we are going to need to have frameworks and systems where you have people to go to when you have a problem, but you're not going to have to do all the manual work. This is where I think we're all going in different directions, but we're going to converge there. Like public to permissioned, with a lot of flow, a lot more automation around regulations. And blockchain is not going to be a mechanism for avoiding paying taxes. It's going to be a mechanism that will automate a lot of stuff. Whether you're going to an ATM, whether you're doing some DeFi, we're going to see a lot more integration with the regulators and the auditors so that everybody is more comfortable and safe at the same time. Okay, so this is where I think it's going to become.
And I think you're certainly not crazy leaving Goldman Sachs. They finally have made some job postings on digital assets, VP for digital assets. So you were ahead of your time, Jonathan. And I'll give you some perspective numbers that you said. One desk, typical equities trading of 130 billion. I think the global derivative market today is 600 billion. I had some numbers for this, which is a crazy market, right? And I also find some interesting number that the overall cost of the managing the global capital market infrastructure is $1 trillion worth of just operating it, which brings a lot of perspective to what you're talking about, Jonathan. Certainly,
and the lack of transparency and the risk, like the credit crisis, stuff like this wouldn't happen with the new systems that are coming into play.
True, and I
So
say time
yeah,
and trust and opacity of that information is leading to, we all pay 2% for retirements or whatever. That's because of opacity of the processing element. So you bring some good point. So let me piggyback on that, Jonathan, as you, towards the tail end of it, talked about banks and regulated financial institutions and working with the regulators and working for sort of IBM, which has historically been, servicing as a technology provider to many of the banks. I've written about this topic too, and people have made fun of that, and I've been having an interesting conversation in the ecosystem around why would you want to bring banks to the DeFi ecosystem, and that has been really interesting conversation I've had in my last article that I wrote. But what I want to next move on from a question perspective is, view of cryptocurrency as a payment instrument and blockchain as an infrastructure for DeFi. The impact of existing financial establishment joining the DeFi community, right? So joining, again, the likes of Goldman and like of traditional banks with the same regulatory apparatus and regulatory focus that we've had for other asset classes, will it muddy the water? Will they want to preserve their territory by joining that to say, we don't want to lose, this is the early days of eBay when everybody was selling as a channel? Or will they embrace the principles of decentralized and enrich the ecosystem? So there's always been this sort of a dichotomy of saying, why would you want the banks to join this if you have such a good thing going? But I've always felt that banks have had the experience, the history, the capital, and the interest in growing the market. But then when banks join, what will that change? And I'd love to get your perspective. And maybe, Alon, you're smiling. I'll start with you. What are your thoughts on that?
How extreme do I want to get in my response? But honestly, the way I feel about it in terms of like really in my heart and why I'm in this space is I absolutely don't want the banks involved in this, right? Like if I'm going to be totally honest. But if we think
really, why?
Well, if I think about it pragmatically and I go, do I want the banks involved? I think we have to redefine what a bank is, because what a bank is today is not what a bank was or should have been 5 or 10 years ago, and what it'll be in 10 years will be different. And I think that the banks are the reason why we had the financial crisis, and I do truly believe that the people in charge of the banks were probably more in charge than the governments in terms of creating those crises. So and you could go down an extreme rabbit hole, and I was like a punk rocker growing up, and so I could go down that path, but I think that that's why I love DeFi, because there's sort of, I look at our portfolio as like two ends of the spectrum. I spent all this time in the crowdfunding space and learning and understanding rules and regulations and exemptions and Reg A plus versus Reg D versus Reg CF and all these new things that happened when we sort of lobbied to get those things to happen years ago. And I think of what we're doing with Onera, one of our portfolio companies, which I'm a co-founder of. So clearly, I truly believe in enforcing regulation, dealing with regulation. But I love the DeFi space too, because I feel like the banks have to look at both sides of this, and there's no chance they're getting out of this alive without being more transparent, getting better products for their customers, adopting technology like this, or they're gonna be out of business, right? So like there's a saying that dinosaurs will die, right? I will not break the rules myself. I'm a law-abiding citizen with kids in the United States. I'm not going to do any of that. But what I would like is products like Onera, products that are being built to enforce regulation, deal with regulation, and streamline the process. Because when a company, the number one reason a startup fails is because they run out of money. The number one job creator in our country, the only sector creating net new jobs, are startups. So I want startups to succeed. And if they're to succeed, I want them to be able to raise money. I want them to not have to spend all their money on lawyers and accountants to satisfy legal obligations that could be automated. So I want our technology to make the process so simple and easy that the regulation isn't as big of a deal, and that the regulation does what it's supposed to do, which is catch the bad people who are doing bad things. The problem is, if you look at DeFi on the side where everyone's sort of purposely going around regulation, there are people who are breaking the rules and are doing bad things, but there are people who are doing great things and who I think the rules will bend to and work with and morph with, I hope, over time. I look at those people as creating the pressure to make the government do the right thing and to allow the people who are doing the right thing to really move the needle for the rest of us.
No, and Alon, I appreciate that interesting question, because you work with the Global Digital Finance and Onera. I work with them too in terms of what they're trying to do in bringing this sort of a balance between the DeFi world and having the right apparatus to it. I think it's really an interesting sort of work that Onera is doing in that space with FinP2P protocol and so on and so forth. So certainly a very balanced point of view. Todd, what are your thoughts coming from the crypto and ATM world? Because you are halfway there, you're relying on ATM network and dealing with easy access.
Yeah, I think one of the reasons that we've been fairly successful off the part is because we sort of recognize what we're good at. We don't have a humongous team, but we've got a very talented team, except for myself, of course. I think what we do is, as far as just providing that API that connects basically, an established sort of business to business type of situation that is also B2C in the customer sense. But we've really just provided the utility for these, organizations that have been in the market for the past 30 years to be able to connect with their sort of established customer bases, utilizing cryptocurrency and stuff. We sort of recognize, as I was sort of saying before, that the amount of money that it takes for us to go and acquire those billions of customers is difficult, and traditional institutions have the benefit of being that trusted source, right? I'm saying his mom likes to go to the bank because she likes to go there. They trust that that's there, and that's not something that is easily shaken from people. Like, to get a person to move from financial institution A to financial institution B to save a few dollars on their savings account, or their transaction fees might not be that palatable if they've got mortgages and lines of credit and so on. So I think that the companies that are coming up in the cryptocurrency space that are customer focused will really need to do a great job of showing not just the technological benefits, but really the financial benefits that will have to be backed by them going through the correct regulatory process and having that correct regulatory framework, so that they can sort of, in the finance world, present themselves as a new institution that's not FDIC backed, but still gives customers that same sort of trust that allows them to capitalize on those customer base and really exploit their technology, which can be great for everybody if you can get over those initial hurdles.
Well, that's a fair point, and I think that's sort of the model that fits exactly what you mentioned up front, right? Hey, Jonathan, I know we have like 7 more minutes. Love to get your perspective on this. This is a heavy-handed question, especially for you, because you've been navigating both of these worlds at the same time. So what are your thoughts?
Yeah, so, speaking about like the law, right? If you look at my Twitter handle, I'm basically like a law-abiding crypto anarchist, right? So I believe that first of all, I stopped like a year ago to try to convince banks that blockchain is a good thing and the collaboration through blockchain is the right thing. It's already happening from my end, right? So the only thing that I think matters right now is not to do technology for the sake of doing technology, because it's cool to do blockchain, but it's all about finding these problems where you either make money or save money. And once we show the way, banks can either join or not, and they will be disrupted. So I'm not fighting the banks. We're working with a lot of financial institutions. We're working with companies like IBM and other kind of big data providers. And our perspective is actually to use the blockchain to, I'm less worried about the speed. So I don't need like this DeFi with like zero fees anywhere, because I'm happy for some people to actually make money and to protect the customer and the customer base. So I don't think that you should disrupt everybody. Some people don't like Amazon. There will be other competitors to Amazon. That's fine. There will be many marketplaces, not just one and not just 1,000. So once we have the regulations in place, and it's going to be a little more clear, we'll get more clarity internationally about, border kind of cross-border trading. And I spent a lot of time actually in China last year, trying to talk to some jurisdictions and provenances and zones that were actually really interested. They didn't like cryptocurrency mostly, but they like the auditing and the control. And if you look at WeChat, it's already there. So I think we need to sort out the regulations, but we need to sort it out for a good reason. And my perspective of how to disrupt here is actually to allow kind of the legal framework and the automations that I was talking about in a way that if you want to do DeFi, let's do responsible DeFi. If I want to work in like, you know, a decentralized network, then let's go all out in a decentralized network and I'll do cross-chain DeFi. You know, I don't want to have just one network, just ERC20 or limit myself to some ETH2 fork or I don't want that. If you want to go all out, let's go all out in terms of like really go maturely into the API, the workflow. What do I need to tick? Which boxes, you know, in terms of KYC, AML, source of funds, reporting, anti-terrorist acts. There's so much to go through. And my personal perspective, I think I'm trying to help, and I was doing it successfully when we work very hard in Acera, even though we're a startup, to basically not scare the regulators enough so that, you know, everything is going to get shut down, but to actually move people around to understand that T+5 doesn't make sense. The T+14 to lock somebody's funds just doesn't make sense. And once we have this alternative, we're in a mobile payments conference, right? So once we show the end user, and you know, I'm basically combining what everybody was saying here, right? We need the UX, we need the legal frameworks, we need the clarity, we need the tech, and that will bring to adoption because that's going to be the right thing to do. So instead of just going and showing like how amazing blockchain is, let's just build more stuff that meet regulations, but in a more efficient way. And that's the path to adoption. This is why I'm spending so much time defining like tokenizations and frameworks. And I want this kind of data flow. So we have like a big product now that kind of we encourage responsible sharing. You know, like what do you share with whom, for how long, how do you revoke sharing? How do you really not breach regulations and privacy issues in Europe, in China, in the US? There's a lot of things that we can automate, but we need to do it responsibly. So it's not just to move like flow and fast and break things. It's actually, especially when we're working with immutable networks, right? So that's another thing. It's actually how do we provide value with peace of mind and safety while allowing the collaboration and the sharing and, you know, the efficiencies. And there's a lot of work to do, but I think I don't know, I'm very positive about it. I think it's happening and we are all part of it. And yeah. So it's a great time to be in this space and to join. Mm-hmm.
We have 2 minutes, so 30 seconds, rapid fire round. Alon, what would you want to, you know, what is your effort to achieve things like, you know, what Jonathan was saying? What would you want to do 30-second quickly in next 5 years to achieve your objectives?
I think that all of these crazy cool technologies and products are amazing and great. And some of the nerds amongst us like the break things fast mentality, but you can't do that when you're talking about $100 million being on something. Like yams and meme tokens and things like that are fun in games until my mom's money is in there and she calls me up the next day, right? So it is a self-selecting group, but I want people to do real security audits. I want people to be a little more realistic when it comes to the crazy stuff, but I want it to keep happening. And innovation is going in the right direction.
Todd, what are your perspective? You're on mute. Todd, you're on mute.
We cannot hear you.
There we go. I got it. Sorry. I think just from our perspective, we're going to, as you can see, I have trouble with technology, keep it simple and let some of these nice, smart folks also on the panelists really try to figure out some of these different infrastructure things. But for us to really just try to break down some of those traditional barriers where moms and pops and even kids that are just trying to learn things out, people middle-aged, whoever it is, just make cryptocurrency continue to be more accessible to the masses and just open up to the door, to which I think there's tremendous opportunity from for lots of people across all different walks of life.
Jonathan, 30 seconds.
30 seconds. So just to give people context, I'm just coming back from like 2 weeks of vacation. I'm stuck in Monaco. Just to give the perspective to what I'm going to say. I said it to somebody just coming back from holidays, and he said that I sound like I'm running to be the next Miss Universe, but I still believe in what I'm about to say. I would like us, all of us, the VCs, the banks, the tech companies, the cloud providers, the infrastructure, the wallets, to start and think about how do we reward all the developers and the startups in the space that are really taking a lot of risk and are being the trailblazers to basically build this technology without really knowing what the regulators are going to do. So we're going to launch a pandemic network where we're going to reward people that code, that share, that really work together just by building stuff that is for the public.
That's
I would
great.
like to reward developers. Yeah,
That's the time
I think
we
we
have.
forget that sometimes.
Jonathan, Alon, and Todd, it was really a pleasure. We had a great short 35 minutes of conversation. I know we could go for hours. But thank you so much for your time, and thank you so much for your, making time for this, especially you, Jonathan, in this tough life in Monaco that you're living.
It's very tough. It's enterprise blockchains, it's difficult. Yes.
Thanks,
All right.
Denton.
Thank you
Thanks so much.
much.
Take care.
Great to see you guys.
Bye, everybody. Bye, Nitin. Bye. Yeah. Cheers.